All right. Good afternoon, everyone. I'm Chris Manning, and today we have the chairman and CEO of EthZilla, McAndrew Rudisill. McAndrew, thank you for joining us.
Chris, thank you for inviting me to be on your podcast. It's very nice to meet you in person.
Yeah, of course. McAndrew, for those who may not be familiar, could you briefly introduce EthZilla and its core mission?
Chris, EthZilla is focused on tokenizing real world assets, and then we have a large amount of Ethereum that we hold on the balance sheet as well, that we stake to generate yield. But our focus going forward is really to generate as much revenue and cash flow as possible off building Ethereum L2 tokens with real world assets inside of them.
All right, great, great. So let's dive into the future a little bit. In your recent shareholder letter, you outlined an ambitious forward-looking plan for 2026 and beyond, centered, just like you said, on scaling real-world asset tokenization. Can you kind of just walk us through the key pillars of this plan and what success looks like to you for this coming year?
Yeah, of course. I think we have to look at the transactions that we've done over just the last couple of months. We've been really busy, and if you look back from the beginning of EthZilla, which was the summer of 2025, we've only been around for 5 months, and I know
Yeah,
it feels like a lot longer than that, but we've actually accomplished a tremendous amount in a short amount of time, and it's taken a lot of forethought to kind of put all these pieces in place. So the first transaction that we did in the fall was we announced an investment directly in liquidity.io, which I believe you hosted Eric Choi a couple of days ago. He's
yep.
the CEO of Liquidity. And what Liquidity has is a digital ATS platform, a registered broker dealer. They have an MPC custody wallet, a transfer agent. They basically have all the pieces of a toolkit that you need to list securitized assets on an exchange that is regulated by the SEC, and you can do multiple different types of offerings on this exchange. But you can also trade and exchange all kinds of different assets, whether it be private equity stakes, assets that we create on Ethereum L2, and with that, it allows you to sell these securities to a global audience. And coupled with it, they have a pretty complex KYC platform, which you need because it is a platform that's set up for accredited investors, and it allows you to compete directly with Securitize and Figure and list those same kinds of assets on that single exchange. So that was deal number one, and that was very important to establish our position in the marketplace as the exclusive provider to Ethereum L2 tokens to Liquidity.io. Now, for EthZilla, how do we make money from that? We announced after we did that a transaction with Karis, and I'll step back on what were we doing with Karas and Zippy. We needed to get direct access to credit conduits so that to create tokens where we have access to credit, we're getting point of origination credit flow that is not filtered through the multiple fee streams of it being held at banks and being held at various securitization layers, so that at point of origination we can execute on credit selection. So what Karis does is it has an AI engine that evaluates car loans on the desktops of dealers, banks, car loan brokers all around the United States. They've already processed $5 billion of loans. The company is going to be profitable as of next quarter, which is an amazing fact for a business that's been in business for 3 years, and it's rapidly ramping up. And we were in heavy competition to make this investment with Karis, with a lot of other large lending operations in the United States, and they wanted to do it with us because they want to bring auto loans on chain. And there's two components to that. So with Karis, we will develop a Karis token, which we can then seed with balance sheet capital, which will allow us to own car loans, but then also sell access to car loans via the token to investors that come into that car loan token, which will be listed on liquidity.io. And that's amazing because we're going to have literally 20,000 points of origination that we can tap into directly to look at the various types of loan flow, and allows us to select the credit quality of those loans, the regions where those loans come from, a lot of different components to curate the portfolio to the risk parameter that we want and the yield parameter that we want for the token that we're going to generate for that Karis token. So that's number
Yep.
one. And that market is $300+ billion a year. And we only need to take a small percentage of that to become a very large player in the online car loan space on Ethereum L2s. And I think that token becomes very large very quickly. Uh, Zippy, second transaction. Heavily competed for asset. Zippy originates between 12 and $15 million a month right now of chattel mortgage loans, which are loans on alternative development units and modular housing units. This is a really tightly controlled market. If you look at who the number one player in the market is, it's Berkshire Hathaway. They keep the loans on balance sheet. Triad Home Loans is the other big player in the market. We competed against multiple private equity firms and a couple large public corporations to make this investment in Zippy, get access to this direct loan flow. And their biggest investor is actually a publicly traded financial services company that they already work with. So we're in very good stead in working with Zippy. And why they wanted to do this was very much the same reason as Caris. We could create a Zippy token, put it onto the liquidity exchange, fund that token. We're receiving cash flows from these loans on a monthly basis, along with the amortization payments. These are 9 to 11% yielding mortgages with a de minimis default rate. It's a lot higher than what your average home loan mortgage is. 20,
Right. Yep.
20 to 30 year term. And then we're going to do the same thing we're doing with Karis. You start to sell that token into the marketplace and let that market expand. We think we can double the flow of Zippy over the course of next year by putting that Zippy token on liquidity. Both of those come onto the exchange. We'll call it early in Q1. Those,
Okay.
those
That's
are
great.
the last three deals that we did, and that's what creates the revenue ramp for 2026. And I can touch on aerospace next.
All right. Just one point on that. Can you kind of expand how the speed and expertise of taking equity stakes and partnerships plays out versus like a ground up approach?
Yeah. Um,
Yeah.
It's a great question. Like, we could never go out and get access to origination of this volume of loans in either market on a ground up basis. I mean, if you just think about it, you'd have to go out and literally partner with regional banks one by one by one by one, or at a dealer level, go out
Yeah.
and talk to these dealers. And it's virtually
Yeah.
impossible. These guys have already created networks of thousands of banks, dealers, HOAs, communities that they're already tapped into, that we're just like tapping into the flow of the river and taking a
Yeah.
percentage of that loan flow. And then that allows us to bring it onto our balance sheet. Otherwise, it would be aggregated onto some large bank's balance sheet, aggregated and securitized, and cut into multiple tranches. We're bringing it all to the institutional investor or the retail investor on our Ethereum L2 and just creating a really high yielding Ethereum token out of the credit quality.
Yeah. It allows you guys to hit the ground running essentially, right? You know,
It's the it's
so
the only it's the only way we could ramp at scale in 2026 is with access to this. And we don't need to do any more transactions because we purposely tapped in to two of the largest markets of loan origination in the United States by doing these deals.
right, right. So yeah, let's move on to the pipeline. Your letter today highlighted leveraging internal leadership and board relationships. Initially focused on, like you said, aerospace equipment, the engines, airframes, without needing additional partners, and then also expanding into like commercial real estate. Can you elaborate a little bit on this specifically? Like, should we expect to see further equity stakes for these verticals?
Yeah. Well, I'm going to answer the last bit first. So we
Okay,
don't
yeah,
need to we don't need to take any more equity stakes to do the next two sets of transactions in aerospace real estate. The aerospace transaction has taken a long time to do. It's effectively cut. We're waiting on the asset to be novated to us from a large U.S. aerospace partner, and it sets the template for us to do the same transaction over and over and over again. And you're going to see is we're going to bring aircraft engines into an Ethereum L2 token and give people access directly to the cash flow of those engines from a very high credit quality counterparty that has a lot of interest in doing this over and over and over again. And so we don't need to take an equity interest in them. They, in fact, want to be invested with us so that we can tokenize engines in the future, and it creates an alternate pathway for them to effectively lease their engines. And these are really high
right,
return assets, and it took quite a long time to put together. On the commercial real estate side, we're not focused on that right now. It's a massive market. We've received inbound calls from literally all over the world asking people to help us tokenize their real estate. And we're focused now on Zippy, Karis, and the aerospace portfolio. And the first token you'll see us get up on stream in 2026 is the aerospace token. And all of them are going to be based on Ethereum.
All right. That's great to hear. I think that answers a lot of people's questions that I've been getting. I wanted to kind of touch base on a little bit of the capital structure, not dive too deep into it. Been getting a lot of questions about. We recently announced the plans to redeem the five $516 million 2028 convertible notes. How do we plan on funding the premium associated with getting out of that deal, and how does this streamline our balance sheet, and how does it provide flexibility for us in the future?
Yeah. So we used or are using capital that was on the balance sheet to take out the convertible note first and foremost. And why it streamlines the balance sheet going forward is um, because of what's going on, I think, in the DAT space as a whole, and you've seen equity price compression across the entire board. The divergence from where the strike price of the convert was to where the stock was trading, we just thought it was too high, and the risk reward made sense to redeem the convert, eliminate the possibility of future dilution, and just take the convert off the balance sheet today, and go to a kind of an all cash balance sheet. Because waiting till the end of next year to basically hope that Ethereum prices had gone up enough to make sure that we were through the strike price of the convert, a more conservative way to approach the entire situation was just redeem the convert, which were part of the terms of the convert, and just move forward with a fully equitized balance sheet. And that allows us to grow and I think completely focus going forward on revenue, because the metrics together, they're going to matter to us next year. Revenue, number one, assets under management in the token side of the business, because that's what's going to ramp the cash flow of this company up.
Right. Yeah, I was glad to see that that deal come forward personally. Also in the letter, you mentioned evaluating like a dynamic ETH and USD allocation and possibly raising additional capital for growth opportunities. What factors are going to guide these decisions as our tokenization business accelerates?
I mean, I think it's a just a relative yield question, and I can't give you precise timing on it. We're carrying a lot of cash on the balance sheet right now, and the cash can fund the growth of the token portfolio as it stands today. But
Right.
it really just comes down to what is the relative yield of ETH versus the relative yield of some of these tokens, and then the opportunity of absolute revenue and cash flow to the equity holders of the stock, and how we allocate that capital. So we like the Ethereum position a lot. We think there's a huge amount of benefit. We love the DeFi community, and I think ETH has a lot of upside over the long term. But we balance that against, look, revenue growth matters a lot. Companies like Figure get very high, they get 20 times revenue multiple going forward.
Yeah.
If we're able to grow our revenue at a really high rate next year, I think that's going to be super accretive to the equity, and it's going to push a lot of upside. So, we're focused on a bit of both here, and it's a balance. And it's something that we discuss at a board level on a regular basis.
Okay. Awesome. Yeah. Thank you for that info. It clears up a lot of things. Yeah, I just had kind of a closing question. What excites you the most about the team's position as being like one of the first movers in this space and being in the frontier of real world asset tokenization?
Chris, I can tell you this. I mean, we've got between the liquidity team, what we got going at Karas and Zippy and everything on our side, the amount of programmers and engineers and lawyers that we've had working on all these different structures to put this stuff in place. I think we figured out how to do this, and I'm excited because we're now actually going to be able to execute on it, and I'm looking forward to bringing this stuff to market beginning in January of next year. I think it's going to change the world. I mean, you're going to bring real world assets on Ethereum wrapped tokens that people can go trade and then get monthly cash flow and things that they've never been able to go buy in this denomination before, and it's all going to be ETH based, and
Yeah.
that's going to be huge for all of us.
Yeah. It opens up a new space, new opportunities, and it's very exciting. Before we wrap this up, is there anything else that you wanted to get off your mind or tell people or explain?
I want to talk about the stock price, because I mean we are all very focused on the stock price. I know Eric talked about it when he was on the call with you all. We want the stock
Yeah.
price to go up. We're all big shareholders. I get a lot of questions about buyback, and I get emails about buyback all the time. Right now, despite the stock being down so much, I don't think it's in our best interest to shrink our balance sheet and shrink the liquidity of the company right ahead of when we're going into this massive growth mode on revenue and cash flow. So, we're not actively going to be in the market buying back stock. What we're focused on is building the revenue and cash flow with the cash that's on the balance sheet. And if you saw what we
Right.
did with the last buyback, we were in the market, and every day we were in the market, stock was going up a little bit, but as soon as we stepped back, selling came back into the stock. And I think we're best served to actually create a hard fundamental underpinning for this company of revenue and cash flow. And that is what is going to drive the equity valuation in 2026.
Right. Yeah. Well, thank you for your time, McAndrew and John, and um, hopefully we can speak again in the future. And you guys keep doing your thing.
Yeah, well, we appreciate it, Chris. Feel free to reach out.
All right. Thank
All
you.
right, thank you.
Goodbye.